Morning traders, Paul here with GammaEdge. Today is Wednesday, the 9th of August. Let's get started. Pause your players here, read to the very bottom. If you agree, hit that play button. Summary for today. We're seeing a little bit of greenness in the CT. It's weak, but we're biased up. We have what we call a trigger day for the CT. It closed higher than it did yesterday, and this is usually an entry signal if you have stocks that are setting up. But we will note it's very weak right now. Long-term market model, which uses the what we call the ribbon, it also is entered a new state, which technically is another trigger day. But again, we've been very weak in the ribbon over the last couple weeks as we see the transitions. And the bottom line is that the overall market determination, slight bullish bias to the upside, but it is minor and not very strong. So do not get out over your ski tips if you intend to play to the long side. You could probably equally play the short side and have almost the exact same outcomes. PM complex, you're going to see a common theme here. 4520, 4500 are the transition ranges. You'll see this as we go through some of the slides here. We closed at 44.99. We are in the lower part of transition. The bulls have got some work to do. We're not seeing a huge impetus to the north. There's still a lot of overhead. We're not seeing a lot of upside speculation overall, so just be aware of that. What this means is that we're in the money put delta dominated above us, and we're out of the money put delta dominated below us. And when we see that overall, the call speculators are just not able to win the battles right now. Combo complex, which is the AM and the PM settled, that 45.25, 45.05, you can see that it's almost coincident on the PM complex. We're slightly below this. It's weaker, and this gives us a slight bearish bias independent of what the CT is telling us. Overhead, we do have delta dominated below spot, and we do have a delta dominated above spot. Why this is important, just in the picture, this is almost a pair of twos, and really is hard for us to advance one way or the other. Even though plus GEX remains up at 4,600, we don't see an easy path to get up there, and we think this is really, really important. Zero DTE, folks, note that 4505, 4500. For the zero DTE today, it's very tight, it's well defined. The plus GEX level, you'll see this on the next slides, 4530. It's coincident with the zero DTE call open interest level also. So we've got a lot of calls sitting up there at 4530. Just be aware of that. Minus GEX is down there at 4490. You can create your if-thens on this, and I've done that. I'm not going to go through these. You can pause right here and read through those. As always, targeting, we'll move these around as we open and close deltas. That'll absolutely swamp anything that Vanna, Charm, Gamma puts on the table. The delta is a first order function off of change in price, whereas all those others are second order functions. And what that means for you is if you're not paying attention to delta, you're probably going to be really disappointed. So we do pay attention to delta, we pay attention to all the Greeks, but we also know the order of priority and would urge you to come in and kick the tires and figure that out with us. Taking a look at the cumulative tick model, as I said, we do have some greenness. So this big green arrow that exists down here is showing us that the CT did close higher yesterday. And you can also see where I circled, it closed up into the ribbon, which will now turn that ribbon from an off status, which is what it was yesterday, back to kind of the initial stages of a long status. This is the first step. If the bulls are going to step up here, this is the first step that is necessary to get any movement to the upside. Now, if this fails, and it can certainly fail, and you can see the slope of that red line on top there, it's in a downward trend, and that means exactly what you think it does. This is a very weak position to start with, and we could turn on a dime and drop below that light blue or cyan line, and if we stay below that line, the bears will come out in force and they will take over. I'm going to switch screens now, and I'm going to go over to our web app. It's a little easier to navigate than just clicking through the slides. I wanted to show you just how easy this is. So first of all, I've got the SPXP. The P is our PM settled. We create two symbols here, SPXA, SPXP. The PM is the PM, or the P is the PM. The A is the AM settled. So we can isolate each of these, and if you just type SPX, and we'll do this here in a second, you'll get both the combo complex. So over here is the expiries, and this white line box that you see here is the transition zone that we talk about. The gold area here is exactly where we are sitting as of the close yesterday, and you can see that we're using spot from yesterday, but we're using some data that we have from this morning, which updates the complex. Now, a couple things to pay attention to. When we see what we're seeing here, this is plus GEX over here on the left-hand side with this green bubble. Here in the middle of the page where it says 72,000, that is a call open interest, and you can see the 4,600 strike is coincident on these. So this is clearly the upside target. Want to draw your eye to the net delta area that you see here. This net delta zone is not fully green, and that means we have both positive deltas as well as negative deltas in the overhead. So the call speculators, which would be out of the money calls, although they are present on some of these strikes, you can see there's some pretty big dominance, especially at that 45.50 strike right here, where we have a significant amount of negative deltas, and it's going to be pretty hard to move through that until we start seeing more call speculation above us. What's important is that below us in the PM complex is we've got a tremendous amount of out of the money put speculators. Now this can work two ways for us, and it depends on where we are within the structure. If we can remain up in the transition, these will be supportive charm flows overall. That'll be good. That'll help us in the big picture of staying up and being supported. But you can see if we move down through the 44.90, the 44.75, and even points lower, this will move us through some negative gamma. And that in general is going to be a problem for the dealers as they will increase their gamma exposure as we move down here, and we could see more selling, ostensibly pushing us down towards the 44.50 line. So I'm going to go ahead and just look at the 1 DTE here. Here's the very easy to switch in between these, and you can see that 45.30 and the 44.90 zones here. And you can draw your if-thens based upon this. Again, to the overhead, you can see a lot of the lack of out-of-the-money call speculators. They do exist. You can see in this green area that I'm clicking on right now, we do have some out-of-the-money call speculators above us, but in general, we have a dominance of the in-the-money puts above us, and this lack of out-of-the-money call speculators, unless we see a lot of targeting today pushing us upward, it's going to be really, really hard to break through this and move upward of this 45.30. If we do hit 45.30 for whatever reason, we do see stalling right here at the 45.35, 45.40 zone, and you can see the transition in the deltas is fairly significant, and we think that'll play a big role. You can use the Discord command VALD to watch this throughout the day, and if you want to watch multiple days, you can watch a VALU, which will aggregate them. To the downside, we've really only got two gamma strikes that we're really paying attention to today, 44.90 and the 44.75. In general, these are going to be supportive if we remain above them. The charm flows will help prop us up, but if we lose these things, they will now flip those puts in the money, and as we flip those puts in the money, their deltas will limit towards -1 or -100, depending on how you notionally do it, and that will just probably nail the coffin shut unless we see some monetization there. Looking at the 1 DTE, I just flipped over here. You can see transitions fatter. That 45.40 now is there. We've got a little bit more of the call spread here in the gamma. You can see that on the bar chart. Same thing on here on the put side, but you can see the deltas are really mixed above and below. And when we get this, it's really a pair of twos. It's hard to discern. I also want to note that over here in the call open interest, this is a lower number, so do not torture the data to tell the story you want to see. For the SPX single days, we'd like to see over 200,000 contracts. We're not seeing this for tomorrow. It's a Thursday. Tuesdays, Thursdays are generally weak, so that's a fairly big deal. Now I want to add and just look at the balance of the week, holding down the control key and just selecting these. You can see I've got Wednesday, Thursday, Friday indicated. shows a little bit better picture of what we have to navigate for the week. This is all about sequencing. It's all about navigating. If you don't understand how you're going to get through each of the days, then you're probably leaving some money on the table. So above this 45-60 zone, you can see that the deltas are decisively red. Unless we see calls being opened up here to pound these things into submission and turn them green, we're probably not getting above the range here, 45-40 up through 45-55. By the end of the week. It's just it's a long path to get through. We need to see calls being opened, and we need to see the deltas flip here. Historically, it's almost impossible to make that transition without seeing the deltas flip. Again, if you're not watching deltas, you're making a mistake, and we know a lot of folks out there don't look at it like we do. To the downside, you can see below us we have a lot of out of the money put speculation still going on. Fairly good size, and what this means is that unless these folks close, that's going to remain in place for the week. And although it could be supportive in charm flows, and that's a great thing, and it will keep us from collapsing, you can see it does extend down to all the way down here to 44.25 before the deltas start reverting over to the in the money calls. So just be aware, a lot of weakness around. Overall put dominated in gamma, up and down. You can see the deltas are not very strong. For those of you who have been following this for a while, this is not a good bullish picture. It's not also decisively for the bears, although the bears are still controlling the roost, and because we're at the lower part of the projected transition for tomorrow, we are starting from a position of weakness. We absolutely have got to get above 45.20 to 45.25 to have any chance, and this has to be a close, to have any chance of moving upward. So I'm going to go ahead now and I'm going to flip over to the combo complex. We'll let it load here. The combo complex is the AM and the PMs. What it's doing right now, it's actually going out to our servers. It's recalculating everything in real time. You're going to see the timestamp over here update. And so here we are, 8:30 Eastern time. You can see transition. Now this is the mothership, right? We've got over 19 million contracts sitting here. This is the largest liquid instrument that exists in the cash marketplace. And you can see below us we do have in the money calls, with the exception of a few strikes here that are showing some out of the money puts, but in general we're very strong to the downside. So this is another reason we do not think that we're going to collapse anytime soon. We've got to get more put speculation to the downside in order to really pull us south. We are not seeing it. And unless we see intraday action that really changes the picture here, we do think that although this gamma, if we drop into this zone, will be destructive to the overall short-term price action, there will be a point where we'll probably monetize, and you can see right now that's indicated up here with our COTMP value, 44.84, which puts us right down into this zone here that we think that we could potentially move towards. Now, to the upside, you can see we don't have a nice clean structure for the out-of-the-money call speculation. We'd like to see greens above us. We're not seeing that. We're seeing effectively the in-the-money puts still dominating the roost all the way up to 4,600. As long as that continues, the path north is going to be jagged. It's going to be very difficult. We call it the drunken sailor, where we can move up and then we move down. We move up, we move down, and it's really going to be biased. So the range here, 4,600, to the upside, and the downside 44.90, perhaps even a bit lower to 44.65, is really the playing zone. And so play accordingly. You can probably paper trading only, of course, because nothing here is a recommendation to buy or sell any security. But if you're paper trading this, you probably could increase your long exposure if we do pull back. And then if we do pull up here, you can see that it's going to be very, very difficult to make upward progress. And you could possibly play some short-term bounces as a mean reversion back towards the transition zone. Last view here, let's just go ahead and take a look here, just see what we've got. So we're basically looking at, this is the JPM strike for the end of September. September. It is already rearing its head. It is not liquid. These are about 39,000 short calls that are sitting up there, and they have this impact. They definitely are influential. Plus GEX is sitting right here at 4,600. Transition is sitting right here at 45.20, 45.25. You can see that. Minus transition sitting right here at 4,500, just as we said in the previous slide, and then minus GEX sitting here at 44.90. You can see we've got a nice distribution. This is a normal distribution. Statistically a normal distribution, more or less. That's a very good downside picture. And we also have a normal distribution, more or less, sitting here on the upside. We have a market, and as such, we don't have an imbalance. We're sitting right in the middle here. You can see where spot price is. We're right at transition. If the bears are going to take over, they need to really start pounding the puts and opening the puts down here. If the bulls are going to take over, we need to get above the plus trans level, and we need to see a lot of calls going in. You can see the 46, 47, 48, and 5,000 strikes are clearly in the crosshairs of the bears, or excuse me, the bulls. And you can also see to the downside, the 44, 43, 42, and 41 are clearly in the crosshairs of the bears. So balanced. We're not calling one way or the other. We are balanced, and play it accordingly. So with that, I will leave you. If you have any questions, any comments, feel free to come in to GammaEdge.us. You can also follow us on Twitter if you're so inclined. We do post occasionally and give you some videos there. And then here on YouTube, we'd like two things. If you like today's commentary, give us a thumbs up. It gives me immediate feedback that I'm providing content you find actionable. And two, subscribe so you get notified next time that we post something. So with that, happy hump day. I bid you farewell and hope to see everybody in the Discord. Thanks.